everybody, Russell Markham here from VectorVest. Before we get going, please note there our financial services license. You can read up more about it too per our financial services guide on our website. And in the next slide here, please be aware there any advice is general advice only. We can't take into account your personal objectives, financial situations or needs. Please do speak to your financial professional. Past performance is not a guarantee of future results. Forecasts and back tests used or discussed in this presentation are intended as guide only. Actual results may be affected by known or unknown risks or uncertainties and therefore may differ materially from the results ultimately achieved. So I'm hopping right here into VectorVest, and what I'm going to do here is I'm going to build the watch list with these given stocks. So what you do here, if you're new to VectorVest, hop along to Viewers. Alright, so you go to Viewers, then Watch List Viewer. The one I've picked on, the group I've picked on today is My Watch Lists. So click on My Watch Lists and then create a new watch list and give it a name accordingly. Now in this case I called it the Big Four, or big retailers in this case here, right? So where are we in terms of our layout here? There we are, big retailers. Okay, so let's put it down the bottom. If you click A to Z button, so open it all up and then close it back down again, you'll see now it'll put it in alphabetic order. So when you first put it in, it goes all the way down to the bottom and then it'll be in alphabetic order. Okay, so big retailers, and then once you've created that, then you just simply add in. So then I just added in these ones here. So mts.ax, comma, edv.ax, comma, ww.ax, and ws.ax, and press enter on my keyboard. And it'll put them in. Okay, so here they all are for you. So that's just how quick and easy it is to set up a watch list. So if you haven't done that already, you're new to VectorVest, put in the stocks that you're interested in, put in the stocks that you currently own or looking potentially to own one day, put them in and have a look. And I'll show you just a basic way to view it. So all I've done here is I've put in some of the biggest retailers here. And I can come now down to the bottom of the watch list, right click, and I can view the watch list average. So straight away I get a snapshot and I can see, okay, well this has been the price pattern over the last couple of months, and you can see over here it's not looking particularly very healthy at the moment, is it? Things have come off, but then look what's happening here, it's just starting to pick up again, hence the weekly essay this week on this. Okay, so then I can come in, I can put in things like earnings, right? So what have the earnings been doing? So if I'm going back a bit over time, I can see here earnings were tracking up very nicely, and the big retailers were doing really well, and things really came off. The fear kicked in during COVID. People really sort of started to hold on to their pennies tightly, concerned about what the future would hold. But you can see here, with all the stimulus that's been paid out and whatever have you, investors, or should I say in this case retailers, are coming back out and starting to buy up again. So you can see there's a change taking place. All right, so if I pull it back over here, you get the idea. And then what I can do is I can come in individually and look at the individual stocks. So if I graph these given stocks, so I just click on the first one, hold my shift key down to the bottom one here, and on here where it notes graph, click on graph selected. All right, so I've already done that. So here we go. So what I've done here is I've put on the price and I've put on earnings, EPS. All right, so if you're not finding EPS, add parameter, capital appreciation, and then there it is, EPS, add it in, and then you can put it on. So I'm going to right click here and make this an area graph, change the style, and make it jump out a tad more. There we go. As you can see, a great set of rising earnings, and look at that share price going up. So this is one that really jumps out at me across the big retailers at the moment is Metacash. Look at that. So doing very well. Go along here, EDV, we don't have any data prior to 12 July. All right, so no information there. There we go, Woolworths, you can see, yeah, done pretty well here on the earnings, but then look what happened, the earnings started to fall away, and Woolworths has been under a bit of pressure. All right, scrolling down a bit more here, Wesfarmers, got to give it to Wesfarmers, earnings are brilliant at the moment. What gives, why is the share price falling away? It's to do with the short-term price momentum, so the technicals have been falling away in the market. Why have the technicals been falling away? Because the overall market is going down. So if I move this to one side here, and I'll go to graphs, red note stock on the drop down, market timing, and let's do this. Let's put on our most conservative timing signals. Here are confirmed calls. We have been in a confirmed down since the 14th of January. So I come back here, all right, and scroll up. Let's jump into this one here. Woolworths, or in fact, let's have a look. So we started with Metacash. All right, yeah, there we are, Woolworths. So let's put our confirmed signal on Woolworths. So here we go. So since 14 January, the market's been a confirmed down, but despite that, Woolworths is starting to go against the trend. So that's quite interesting and useful to see. All right, so despite the confirmed down, Woolies is starting to break out. So that's a good sign in the short term, but not so for Wesfarmers. Look at that. There's the confirmed down. So, you know, there we are. Earnings were holding steady and coming up. Technicals falling away. This is heavily to do with the market being sold down at the moment. All right, so just be mindful if you're going to go and look to acquire stocks. As we noted, VectorVest, we want our market to be rising, and then we want to buy rising shares in a rising market. So if I go back up to the first one here, this is the one that stands out for now. Despite the confirmed down, yes, it did get sold down. Yes, like Woolworths, it's fighting and coming back with a vengeance. The earnings are holding steady, and most likely as the market picks up again, it'll be interesting to see. I anticipate the earnings will start picking up. Nobody can predict, but certainly earnings are holding steady for now. All right, so a lot of interesting signs here. Let's take this off for now. Let's put on sales. So always interesting to see what's going on with sales. So you can see here for Metacash, let's make that an area graph, and let's change the style just to jump out a tad better. There we go. So look at that. Metacash sales, let's take off the signals. Metacash sales are trending up. So you're seeing earnings coming up, you're seeing sales coming up. I'm going to add in an additional parameter, VectorVest fields, net profit margin. So for every $1 of sales, what is this company making in profit? It's making about 1.88%. So about just shy of 2 cents for every $1 of sales. You might look at that and say, well, that seems awfully low, but look at the sales number here. This is in millions, 14,406 million. All right, so a lot of retailers will typically have very low margins, but they sell a huge amount of volume, which effectively makes them a lot of money. So what's interesting here is okay, the number seems low, but it's the trend of that number that net profit margin is trending up. The sales are going up. It's no surprises to see the earnings going up. So Metacash jumps out. EDV, we haven't got quite enough information to make a valuable assessment, so I'll skip that one. All right, Woolworths, you can see net profit margin has been a bit lumpy. All right, it went all the way up to 3.07, which is good, but it's come off again. 2.74, it is higher than Metacash, but look at the sales. Sales are coming off. All right, so it's no surprises there then to see that the earnings are sort of sliding away too. Okay, so you've got falling earnings, you've got net profit margin, it's been a bit lumpy, and you've seen the sales dropping off. All right, let's jump to the next one here. Wesfarmers, I like the sales. Sales are coming up. It's good. I like the net profit margin. Net profit margin is coming up. It's good. Earnings per share, EPS, our 12-month leading forecast on earnings. That's positive too. So this is a symptom more so of the market being sold off. And look at the technicals. So the technicals in this company here, as represented by short-term price momentum, RT, you can see RT has been in a downward trend. So this accounts for what's taking place there at the moment. If we go back to our first one, the one that jumps out, Metacash, and put on RT, look at that, the relative timing, at least in the short term here, it's been going up. Here it's been going up. Here it's been going up. So you've had waves of technical brilliance, so to speak, backed up with a rising set of sales, good earnings, and steady net profit margin holding steady there. So that's the one that jumps out. Now let's do this. Let's go back to the graphs, and what I'm going to do is I'm going to put in Metacash to begin with. All right, so Metacash, and what we'll do here is we're going to change it from stock to performance. So there we go. Here it comes in the performance. And you can see here's Metacash as benchmarked against the consumer staples industry/sector. I'll take this off for now. And what I want to do is I want to go and benchmark it against the other ones we had a look at. So EDV, it's probably not fair to put it on there because, now don't put /, there we are, make sure I type that correctly, put .ax, so that's going to tell it it's for Australia. It's probably not entirely fair because we haven't got that much information to benchmark with, but we'll see how that stacks up. So just bear that in mind. Here we are, Woolworths.ax, and Wesfarmers.ax. All right, so just make sure you put in .ax, not /. All right, there we go. So I'll put these in. Now I'm going to highlight Metacash here. I'm going to change the style, and I'm going to make it jump out just a tad more. All right, so let's make it jump out even more, so it really jumps out. Here we are. Let's do this. All right, there we go. All right, so that's one we're looking at the moment. Now, if I go back 5 years, so this is benchmarking the stocks with their relative performance against each other. So you can see over 5 years. Now, you can see there Endeavour Group's, we can only go back so much in time. So I think for the analysis, I'll take this one off. So now we're going to look at these three. So Metacash, Woolworths, and Wesfarmers. If you want to look at the overall industry, you can see how the overall industry stacks up as well. It's this one here, so it's been under a bit of pressure. But let's keep these on for now. You can see, look, Metacash has been the standout performer over 5 years. And let's keep going back a bit more. It's not always been the case. So I'll pull it back, say 8 years. So what VectorVest is doing is it's starting at a common base. Everybody is equal there. And then we're looking at the performance relative to that starting point. So that's the start line, so to speak. And then where do we end up in the race as such? You can see here Wesfarmers over 8 years has been the standout performer. All right. Metacash in place number 2, and then you've got Woolworths there. All right. So if we go back a bit more, let's go back all the way back 15 odd years. And this will be really interesting for you to see. You can see over here, over 15 years, look at this. Metacash has not been a good performer over the 15-year period. It's been the laggard. And Wesfarmers has been the standout performance, followed very closely by Woolies. Now, we're investing right now. We're not necessarily looking back 15 odd years worth. So I think it's fair to say over the last 5 years, this gives us a very clear idea. And, it's not just simply limited to, the big retailers. It's up to you to benchmark whatever else you would like. I like to benchmark when looking at certain sectors or industries. Then I can see what are the best performers in there, but nothing's stopping you coming in and putting in some other stocks in here as well. So you can come in and put in a mining stock, for example. You might say, well, okay, I'm looking at the big retailers and they're paying some quite good dividends, some of them, but how does that stack up against, my mining stock, for example? So here, if I change the style, so it can get a bit cluttered, so just make sure that you differentiate it. And you can see, oh, okay, well, look, BHP's right up there. It's performed just as well, if not better, than Metacash. So you've got these opportunities to benchmark. It's a very useful way of analyzing your stocks relative to other stocks. What are the opportunity costs relative to the other stocks? All right, so I hope you got a lot out of it. Until next week, bye for now.